Oh, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, let's first talk about what's going on in the bond market or the treasury market. We're continuing to see money fly into treasuries. We now have the 10-year below 2.5%. It's about 2.45 right now. This is a trend that I don't think anybody should be ignoring, where money is taking kind of the safer play. It doesn't matter what these bonds are yielding, people seem to be putting money into this area. What do you have to say about the pretty aggressive move we've seen into treasuries?
Yeah, you're exactly right, Corey. It has been fairly aggressive. And if we look at some charts of bond yields, specifically the 10-year, that's broken down to a new 52-week low. And the 30-year should be pretty close to that. As far as an inversion with the 2-year and the 10-year, the 2-year, of course, is a proxy for the Fed funds. We have the 2-year at 2.33 now and the 10-year at 2.45. So that spread is getting tighter and lower. It's almost to single digits, but not quite yet. What really matters with respect to the bond market and the yield curve and bond yields is it's not really the inversion itself, but it's what happens after you get an inversion, and that's a steepening curve, which basically either you have inflation really accelerating or you have the Fed cutting rates. So it's one of the two that causes the steepening, and that's really the bearish signal. So we're not at a steepening yet. I know we're going to get into it, Corey. There's a lot of things are in flux right now. With respect to bonds, I think precious metals should be faring better here. Gold is still, I want to say, I haven't looked at it, but I want to say it's still almost $40 off its high. Yet if you look at this move in bonds, I would think precious metals should be stronger than where they are. So that leads me to think that, there's a possibility that maybe this move into bonds and this decline in bond yields that maybe there's a risk that could come to an end, and we could see a reversal of that shortly, because it hasn't been confirmed by strength in precious metals.
No, I think some of the precious metals bulls are saying, it is encouraging that the metal is hanging up there, but you're right. Why do you think, I guess we could say, that gold is being ignored by the markets while the safety of bonds seems to be on everyone's mind? Is it simply because of the Fed turning more dovish and central banks, you would think, if worse comes to worse, supporting their own bond markets?
Yeah, I mean, that makes a lot of sense. Like I said, a lot of things are in flux here, and so there may not be an obvious and clear answer. And, I'm just guessing because I don't have a clear answer yet, but my guess would be that maybe the strength in bonds is a little overdone here and we could see a reversal. It's either that or the market thinks that, the other thing would be maybe the market still thinks we're far from a rate cut. But that doesn't make sense given what we saw after the Fed meeting. The Fed funds futures priced in close to a 40% chance of a hike this year. That figures 50% if you go out to January 2020. So to me, I would just go back to thinking, the fact that precious metals have been unable to make a new high despite these sharp declines in bond yields in the last couple of weeks. That would tell me that, maybe we could see a reversal of that with respect to bonds very soon. I haven't looked at the sentiment indicators for bonds, but maybe they're a little bit stretched here and a little bit overdone. Sometimes that happens after a couple of days after a Fed meeting where you get this Fed reaction and it turns out to, mark either a high or a low with respect to various markets.
Now let's also talk about U.S. equity markets and the performance of metals compared to them. We're seeing, again, gold not really doing a whole lot today, but U.S. equity markets falling quite hard, the selling continuing. But this has been very volatile for the U.S. equity markets. What's the comparisons or relationships that you're drawing between how the metals are reacting to market volatility?
Well, I think, and I'm looking today, and I'm looking at gold against the stocks and gold stocks against the stocks, and we are seeing a nice move today in the ratio charts, but the question is, how sustainable is that going to be when we look at gold is trading? It's still below major resistance in the mid 1300s, and the S&P 500, though it's down 1.5% today, a couple of days ago it still broke above resistance, and it's trading just over 2,800 now, but it managed to exceed the resistance in the mid 2,600. So the point that I'm getting at is, I see gold is really unlikely to break out anytime soon. The S&P still is dealing with resistance, but I think the S&P potentially has a clear path higher just in the short term. So that leads me to think, how sustainable is the strength that we're seeing today in precious metals against the stock market? Looking at those ratios, Corey, I mean, the gold stocks are outperforming gold, which is a good thing. But we need to see a lot more than that. It really, if it's one thing, it really comes down to precious metals outperforming the stock market. And, we can look at gold, gold stocks are leading gold. So we can look at gold stocks against the S&P 500. And when I look at that chart, it's not particularly bullish or bearish. If we could see this move extend for a week or two, then it would look a lot more bullish. And, nominally speaking with gold stocks, breadth is at pretty good levels right now. And so it's a situation where if we could just see a little bit of follow through, things would look a lot better. But then at the same time, if we don't get any follow through and we get some selling, over the coming days, then, the potential for these charts to look better would be gone. So I don't mean to talk in circles or be unequivocal here. It's just that a lot of things are in flux, and it's not really obvious to me what's going to happen in the short term.
It sounds like we're all really just waiting for some sort of a breakout. As much as we want to draw relationships from one market to the other, the fact of the matter is a lot of markets right now are trading within their ranges, and some of these ranges, like for the precious metals, have been in place for multiple years, upwards of 6 to 7 years. So is it even now more just important to watch key resistance levels and wait until they actually break to confirm some sort of a either bullish or bearish move?
Well, I mean, the problem with waiting, if you're waiting for confirmation for a bull market in precious metals, is when you do get confirmation, metals and miners will obviously be trading higher. So you have to anticipate it, and that's difficult, obviously. Gold against, gold stocks against the S&P or gold against the S&P, those are really I think what you want to be watching. If there's only one chart you can watch, that's what I would be watching. More strength in those ratios would be a really, really positive sign for precious metals. And obviously it makes sense. I mean, we've talked about this before. It all links together, because if precious metals are going to outperform the stock market, then there's probably stock market weakness, there's probably economic weakness, and that eventually is going to lead to the Fed cutting. I mean, I gave the percentages earlier. We're not that far away from that. But, looking at bonds, it does worry me a little bit, Corey, with respect to bonds, that we've had this strong move lower in bond yields, and in precious metals. They've held up okay, but given the strong move, we would think more money should be flowing into precious metals. So that's one thing that concerns me. Another thing that concerns me is until the last 2 days, the dollar was down 9 days in a row, and gold just basically yawned at it. And gold stocks yawned at it. So that's what concerns me with precious metals, is we had these bullish developments in the other markets in the last couple weeks. The bullish developments for precious metals with a weak dollar, with bond yields really declining, and gold stocks they weren't able to even retest their recent highs. So that leads me to think, we're not going to see an imminent breakout type move in precious metals. So those are the things that I'm looking at. Like I said before, many things are in flux here. Ultimately, precious metals against the stock market, that's the number one thing to watch if you have to boil it down to one chart or one indicator.
All right, something to consider for everybody watching these markets. I know it's been kind of a back and forth. A lot of the bulls have been saying it's encouraging that the metals are hanging up there, but you have pointed out some things, especially with the dollar being down 9 trading days in a row, that not really benefiting the metals. So continues to be a sector where I think a whole lot of people just aren't really even paying attention. There is some diversification into the metals, but nothing major to drive them to be even more attractive to more of the generalist investors. Jordan, it's good chatting with you. Thanks for breaking down some moves at the end of this week that are interesting but still need a bit of follow through. Have a great weekend.